Hello everyone. First, please allow me to pray that the investors in Luna will recover soon, and I hope that they will make up for their losses in the near future. In today's video, we will talk about the early bird strategy, which will be explained for the first time on YouTube with some minor modifications. This strategy works very accurately with a one-day time frame, and the good profits for this long frame will cover the effort spent and the little profits of the small frame strategies, and the most importantly, it is successful in most trades. This strategy is called the early bird, in reference to the proverb that an early bird catches a worm, which means arriving early and especially before potential competitors. But what does this law of nature mean on trading chart? This means that instead of waiting for the breakout and buying here, we will buy here at this candle, and then we will buy again and again. Also, instead of buying here, we will be the early bird and we will buy here. And here too, the same thing happened. This strategy is a swing trading strategy, and it is a manual strategy that based on trend lines, but to make it easier to trade, we will use it with some good indicators to find the entry points. The first indicator in this strategy will be the OBV indicator, and we will use it to determine the direction of the trend. When it is in green, it means that the trend is moving upward, but when it is in red, as we see here, it means that the trend is moving downward. The second indicator will be the highest high and the lowest low indicator, and we will use it to determine the previous highs and also the previous lows when we need them. The last indicator is this indicator, which is a two moving average lines with some great and interesting options. After this long introduction, let's start applying the strategy step by step. Let's start by opening the indicators box in the search field, type OBV, and choose this indicator, which was coded by unknown unicorn. Next, open the indicator settings, head to the inputs, and change the period to 200, knowing that this indicator will compensate for the 200 moving average, and it can also be more effective in determining the direction of the trend. Now let's find the second indicator. After opening the indicator box, type higher high and lower low, and choose this indicator, which was coded by Lonesome the Blue. Open the indicator settings and make sure that the inputs are 4 and 4. Then, go to the style and remove everything except the higher high and lower low. All that remains is to apply the last indicator by opening the indicators box again. In the search field, type Trader OX and choose this indicator, which was coded by BTC Charlie. We also need to open indicator settings to activate some other features. First, in the style section, remove the bar colors. You will find 3 stages for these colors, just remove them all. Then we go to the input, scroll down, and activate this feature because we will rely on it so much. Now our chart is ready to trade, and all we need is to understand how to use it. In this explanation, we will start from the beginning. We will start with the uptrend, and then continue until we reach the downtrend, the range trend and the pullback movement. We will try to cover all the obstacles that we may encounter when trading. First, to enter long positions. To do this, we must first start from the OBV indicator, and it must be green and heading upward. Second, the EMA lines must also be green, not red as it happens here. The last condition is to find the target candle, which we will determine by the green lines, as you see here. Since we have known these simple conditions, let's start with the examples, and we will start from this example here, and then we will move to the more difficult one by one. Since the OBV indicator is green and the EMA lines are green, we will look for the target candle. After identifying the target candle by green vertical lines, we will look for the nearest highest top, and this indicator will help us to find it simply. Now all we have to do is draw a line from the highest marked top to the highest level in the target candle. Pick the trend line tool from here and start drawing the line from this top to the highest point of the target candle. And always make sure you put the line above the candle wicks. Now if this line is breached by a green candle, we will enter into a buy position, and the target will be double in relation to the loss. Well, this example was the easiest, but to understand more and to avoid trading hurdles, let's take other examples. Always start from the OBV indicator and make sure that the EMA lines are green, then find the target candle. And after you find the target candle, search for the nearest higher high. Take the trend line tool and connect the higher high candle to the highest level of the target candle. This means we have connected the line from this candle to this candle. But as you can see, this line has not been crossed, so we will look for another target candle. in which case, this will be the candle we want, and since the closest high is still the same, we'll just adjust the line. Here we can see that the line has been breached, so we will enter above the candle that broke the line, and the result will be good as we see here. Let's take this example as well, and let's connect a trend line from this top to the target candle here. As you can see, the first target candle has not been exceeded, so we will take another candle according to the green vertical signal. And then, we will place a buy order directly above it. The stop loss will be according to one of EMA's lines, and since here they are a little close together, we will use the line below. And to understand this more, let's use the replay tool to be a little clearer. Let's suppose we were trading here, and according to the indicators, we drew the trend line, and we are waiting for it to be breached. As we can see, the line has not been breached, but instead, we got another signal. So we will try to adjust the line on this signal, and taking into account the rest of the other indicators. Now at this candle, the breakout occurred, so we will place a buy order above this candle, and the stop loss will be at one of the EMA lines, and in most cases, it is better to use the lower line. Profits will be twice the stop loss, which means the risk-to-reward ratio will be 1 to 2. It is advisable to reduce the profit a little, and not be bound by certain constants. For example, here the stop loss is 7.90, so ignore the 0.90 and just multiply 7. Let's see another example that is slightly different. Here as you can see, we cannot set the stop loss according to the EMA lines. In this case, we will use the nearest candles with a low level, and these candles here will be the intended candles. We enter above the candle that broke the trend line, and the stop loss is below these candles. It is recommended not to place a stop loss too large, so try to find the best. As for the take profit, it will be double as we said before. It is also good to look at the previous top and take it as a first target. Trading is a game of predictions. Try to use everything you have, and always try to learn something new. Even if it does not work for you today, it may work for you tomorrow. Well, let's dig deeper and look for more complex trades. Let's start from here and quickly review these signals. As we said, after making sure that all the indicators are in good condition, we draw the trend line. As you can see, the trend line has been breached here, so we will enter above this candle. In such cases, you can also put a line with an alert, as we explained in the previous video. The stop loss will be at the EMA line, and if it is very close, we can use the low levels of the previous candles. Well, let's see this example too, because it's a little different. After identifying the target candle and the highest high, let's draw the trend line as we learned earlier. As you can see, the trend line was not broken, but instead, another signal appeared. So, we will adjust the trend line so that it is directly above it. And after the breakout is done, we will enter directly above the candle that broke the trend line. The stop loss will be below the EMA lines, and the take profit as we explained in the previous examples. Well, this is the example I was looking for, which is to avoid wrong entry. Like every time, we draw the trend line from the highest top to the target candle. As we can see, the line was not breached in the first signal, but at the second signal it was breached. So we will enter above this candle, but wait. EMA lines change to red color, exactly before the target candle. Also, we do not see any candles that opened above the target candle, so we cannot enter, because of course, there are no candles above it, and all we see is a void. Even if we adjust the trend line on the following signals, we will not get an entry signal, because the EMA lines have turned red. Here is also another example of a false signal, and as you can see, the price didn't cross the candle that broke the trend line, so we didn't find any entry point either. Because as we said, we enter above the candle that broke the trend line. Sorry for the long explanation, but there are a few different examples that I should go through quickly. In this example, we notice that the target candle has reached a level more than the previous high. In this case, we will try to draw the trend above its higher high signal and wait for another candle to break through this level. And here, this candle will be the candle that we will enter above it. Some may say why we don't enter here, above this candle. Well, although it was also successful, but this type of cross candle may be a reversal candle, and also the length of the distance between it and the EMA line is not a good indicator for entry. Here, too, we find the same example as before, so we place the trend line according to the higher high indicator, and we wait for it to be breached as well. In this case, this candle here will be the candle that we will enter above it. But as you can see, another signal appeared before entering above that long candle, so we will not leave it and we will use it as well. Here too, we were the early bird that catches the worm before others get up. When you practice this strategy and master it well, you will not need a lot of indicators that may be late in showing the signals, and you will be able to find the target candles by yourself. For example, there is no entry signal here, but according to the type of candles and the distance of EMA lines from each other, we may be able to speculate that it will be a successful signal. And that's why increasing information is the key to success. Also, try to find the divergence by using the OBV, MACD or the RSI indicator, as discovering the early divergence may give you a future view of what will happen in the market. All that remains is to talk about entering into short positions. First, make sure the OBV indicator is red, and second, make sure the EMA lines are also red. Finally, open the Trader's O indicator settings, go to the inputs and disable this one, then activate this feature as you see here. Now do the opposite of everything we explained and look for the signs of the red lines. Then, find the nearest lower low signal and connect the trend line to the target candle. Now as you see, the breakout occurred, but to be honest, this candle was very weird. Well, let's take the next signal. This one looks good, and the target is achieved, according to the conditions we explained earlier. Here, we do not find a signal, but as I said, when you master it, the vision will often become clear. I was about to forget something very important. I guess you still remember that we said we don't enter long positions when the signals are below EMA's red line. But what about those green triangles that come right after EMA's lines change from red to green? These triangles are also considered entry signals if they are compatible with the green OBV indicator. In such signals, we can use the higher high indicator, even if its signal is above the red EMA line. All that matters is the target candle, which should be above the green line. In the same way, we draw the trend line from the highest high signal to the target candle, and the entry will be above the breakout candle. Well, let's quickly review all the signals from here to the end of the chart. The last note is that this strategy will be very profitable with trailing stop loss by using the higher high and lower low indicator, so if you want to know more about it, just tell me in the comments and I will make a new video explaining this method. Finally, for those who wish to know the original version of this early bird strategy, it is as follows. EMA 25 and EMA 12 to determine swing levels, and EMA 200 to determine the direction of the trend. Also, the Keltner channel indicator to identify breakouts and entry points. Finally, if you want to join the free crypto or Forex signal channel on Telegram, you will find the links below the video. Note that we do not have any paid channel, and everything we offer is free and always will be free. Thanks for watching, and don't forget to subscribe. Good luck.